In this video, I'm going to show you how to find the best strike price for selling covered calls. You see, selling covered calls can be a great way to generate income, and today I'm going to show you how to do it like a pro. Plus, I'm showing an example of a trade that I did today and how I chose which strike price to use. So let's get started and jump over to the screen right now, and the stock that I am trading is TPR, Tapestry Inc. And you see, at some point I got a sign because I'm trading the wheel. I'll tell you more about this a little bit later, but I bought 2,700 shares at $37. And as you can see, today's price is $36.19. So now I can sell covered calls against my existing position. And the question is, what strike price should I use? Should I use the ATM, the at the money call, and sell the 37 call, or the 38 call, or should I even go for the 39 call? Well, let's take a look at it and talk about the pros and cons, and then I'm telling you exactly what I did today. So I'm jumping over here to my calculator. This way I can exactly calculate what are the pros and cons of selling these different strike prices. So as you can see, in the first column here, the stock purchase price is $37. The expiration, I just want to go for the next few days. So today, as I'm recording it, it is August 23rd, so only a 4-day trade. And here's why that is important. I'll tell you in a moment. So I have 2,700 shares, and let's just assume I'm going for a strike price of 38. So I'm not selling at the money, I'm selling one above. So what are the pros and cons here? Well, I can get around 15 cents in premium, which means that I would receive $405 in premium. So this means since this trade is only a 4-day trade, I make $101 per day. Now let's talk about the alternative. So this would be if I'm selling the 38. Same data here if I'm selling the 37, which is the price at which I get assigned. So if I would sell the 37, I could get right now around 50 cents. Actually, let's jump over and see in the live markets how much I could get right now. And you see, it's not even 50 cents. I want to say it's closer to 30 cents. It's 25 cents over 35. All right, so let's plug this in. So this would be 30 cents, meaning that I get twice as much premium. Now, that's very compelling, right? So I can make $810 versus $405. So why wouldn't I go for the 37 and for maximum premium? Well, the difference is if I'm selling calls one strike above, I'm not only making money on selling the calls, but I also can potentially make money on the stock. Let me explain. So I bought, going back here, 2,700 shares at $37. So if I'm selling the call at 37, it means that if TPR moves above 37 by expiration, which is by this Friday in 4 days from now, I would have to sell those at $37. So I bought them for $37. I sell them for $37 means that I'm making zero money on the stock. However, I am keeping the whole premium here of, let's move this up, $810. Now, if I'm selling the 38 call, this means that now I bought all of these shares at 37, and now I have to sell them at 38. However, the stock has to close above 38 on Friday within 4 days. But when it does, I will not only make money on the stock, but also on the option. Because I purchased the stocks for 37, now I have to sell it at 38 because that is the strike price that I'm selling the call for. And this means that I make $405 in premium on selling the calls, plus $1 per share that I own, so an additional $2,700. You see it here. So the difference is, let me just zoom in, this way you see it better. I can either make $810 guaranteed because nobody can take this premium away from me, or I can make $405, have that much guarantee, but then with the potential of making a $2,700. Now, before I tell you of what exactly I did, let's take a look at what does it do. So is it actually possible for TPR in the next 4 days to move above 38? So let's take a look at this. And right now we are trading at 36.12. So the move that we would have to make is around $1.90. So let's bring up a handy dandy calculator and calculate a move of $1.90 divided by the current share price of around 36, 36.10, 36.12 would mean a 5.2% move. Now that is really not that much for TPR. Today alone, TPR was moving 2%. As you can see right now, we are up 2%. We were as high as 3%. So is it possible for TPA to make a 5% move within 4 days? Absolutely. Now, the question is, what about the 39 strike? So if I can make potentially way more by selling the 38, so one strike above the price that you're assigned, why wouldn't I go for the 39? Well, let's plug it in here. So same data, TPR, I got assigned at 37, or this is when I bought these. We're going for the same expiration in 4 days from now. We are looking at 2,700 shares that I owned and a strike price of 39. Now, let's take a look at the premium here and see how much we can get. So we are moving over to our trading platform and we see, oh my gosh, we can maybe get 5 cents. The bid ask is 5 over 10 cents. So we can probably get the mid price like 5 cents. So let's plug this in here. Let's hop over here and we see 5 cents. Oops, that's 50 cents. There we go. So this means that we would only make $135. Now, admitted, if TPR has the opportunity to go above 39, we would make an additional $5,400 for this trade. Because we bought the stock at $37, we are allowed to sell it at 39, but only if the stock moves above 39. So we make $2 per share times $2,700. This means that right now, we would make $5,400 plus the premium, means $5,535. And you probably already guessed of what exactly I did here, because is it likely for TPR to move above 39? Well, let's go back to the chart here and let's take a look at this. So we are zooming in for the last 3 months. And if we want to go to 39, so this means we are using our handy dandy calculator. 39 minus, we are right now trading at 36.10, somewhere around this, means $2.90. Based on the current price of around $36, this would be an 8% move. And again, within 4 days, that seems a little bit like a stretch to me. So this is where you already see that my calculator is actually showing me what my best option was. This one here is green, so this means that this is in my sweet spot. Here we have orange, here we have red. So yes, I chose to sell the 38 call, where I'm receiving right now a decent premium, $405 in premium, plus the potential to make $2,700 if TPR moves around 5%, 5.5% in the next few days. So this is how I find the best strike price. And if you're trading covered calls, then you're going to love the wheel strategy, because that strategy allows you to buy, let me come back to you. The wheel strategy allows you to buy stocks at a discount, which will get you even a bigger return than just selling covered calls. And I did a video for you on this. Check it out right here. The video is popping up either here or here. I explained the wheel strategy in 50 minutes or less. Take a look at this and I will see you in the next video.